All right, we're back with the highlights. Thursday, I really forgot the date, August 8th. So, lots of volatility in the last week. We all know why. We come into this Thursday after kind of a reversal yesterday. Things have quieted down. It was tough in the early morning, and the chart that you're looking at now is the Bund. The Bund is a 10-year treasury out of Germany. And it was the reason, if you want to get a little history going, if you're trading electronically, which most of you are, the reason why the markets went from trading floors and pits to a screen was this market. Eurex was the exchange that pioneered electronic trading. The reason why it made it so successful was this market. Why? Because it was a liquid market that moved. When you have movement and liquidity, you have a tradable market. They were able to advertise this market to U.S. traders, got it on the board. So in 2000, the prop firm I started in, this was the most popular market traded, and it's what put Eurex on the map and what put computerized, or back then called electronic trading, on the map in actually 1996, 97. But for today, it went negative over the last couple of weeks with some really low yields globally, let alone in Germany. So negative yields on this 10-year Bund. It's called the Bund, the B-U-N-D. It's a German 10-year. When you have periods of volatility like we've had the last 7 or 8 sessions, fear is coming to the market. So when stocks go down, bonds go up. Why? Flight to quality. So when you get spikes in bond products, and this is one of them, generally you'll get weakness in stocks. It's not tick for tick. It's generally when volatility increases due to fear, which we've had the last week. So when I play this, there was a story that came out that was bullish for bonds, at least near term. Watching on the right side, you got a spike from 76 to 84 to 86 to 87. It wasn't just going up. It was going up somewhat quick. Grabbed a quick bid at about 8:50 Central Time this morning. Go back and look. You had a big jump from like 76 up to 86, rotated to 81, back up to 90, 94, 96, the spike, right around 8:50, 8:51 this morning. This was catchable, not in this market, but around 97, even in the S&Ps. Let me stop this for now, close this or shrink it, open up our S&P. They got this ridiculous chop around this yellow line, which was today's open. Couldn't rally through 01, couldn't break through 96, and all of a sudden, the news comes out about Germany having more resources as they move into climate change, and it was a story by their finance minister, which was tagged on to their financials, which was their bonds. Either way, bullish bonds, especially in Germany in that Bund, bearish for stocks, catchable around these 97s right there. That's what happened. I'm not going to replay it in the S&P, but this is the ES. The reason why the ES nosedived around 8:50, 8:51 this morning Central Time was that story and that reaction in treasuries. If you weren't watching it and weren't able to react, it's a tool you got to put in your toolbox. It can get you out of trouble. It could get you into a short trade, especially if your bear's looking to leave this range. And it could be an immediate winner if you're struggling to fight through in the first 20 minutes. It could be an effortless trade. Or, like I said, it could answer the question, why did that happen? It didn't just happen out of nowhere. That was news-driven, and it happened, was catchable based on watching, knowing what to watch. And when we came in this morning, you have to watch bonds the last 7 or 8 days because they've been opposite stocks, price-wise. And they nosedived. They came out of this chop. Now, funny thing happened. They don't just go down forever. In fact, most of today in the first 2.5 hours has been to the upside. We might even close 10 or 20 points higher than we are right now. It's been a strong day. And yet the best trade for me and for guys who caught this would have been on the short side. If you would have told someone that, they'd be, well, wait a second, we're up 30 points today. Your best trade was a sell because it was an immediate winner. Now, it runs down about 4 or 5 points, again, pretty quickly within the first minute or so. Capitulates a little bit more into this 92 even area. All right. Then all of a sudden grabs a little bit of a bid and rallies all the way back. Before this rallies back, though, you take a look at your friend the Bund. which maybe got you short because it popped. What does it do? Let's play it. This one I have on rewind. What does it do? It starts to soften up. So what got you into a short position in the stock index, the S&Ps, could get you out of that short position, or maybe open up a long position in stocks when the reason that got you bearish in stocks now starts to get you bullish in stocks. It starts to unwind its strength. Most of its strength came from 82, 83 in the boom. Wham, it comes all the way back. This was a leader to what stocks did in that sequence. You didn't have to catch it to make your week or your day or your month, but you should be more and more on top of these things, especially when the market is sensitive to news, which it has been, which it always will be, but it has been more with all the central bank, all the U.S.-China trade talk, but the currency manipulation and everything else. And you could see this thing come all the way back to where it started. And what that did was, in the S&P, led to this pop. So don't forget, what led us down, led us back up. But if you don't know the leader, none of it's going to help you.